How much more does this record-setting rally have in the tank? Is it already in the early stages of rolling over? Let's ask Tom Lee. He is FundStrat's head of research, a CNBC contributor, and he, as you see, is at Post 9. What's up with this market? We tired? Have we run out of gas? What's the story?
I think the market's consolidating and maybe trying to get direction from what the market does, because we did gain 28% from the April lows. We got to digest that. Now we're in August, like the dog days of August, where liquidity is lower. And I think that we're still holding our breath because we're in a period where the Fed isn't going to make an interest rate decision until September. So some of the key macro is kind of on hold. So I think markets are wait and see, but I'd say that pullbacks have been shallow.
Is it fair to say there's a more sober view from investors about stocks? I mean, you've been suggesting that this is a hated V-shaped recovery, even as we continue to climb this wall of worry until most recently where we've sort of sputtered in place.
That's right. I mean, it's definitely the most hated. I can attest to it from our conversations with clients. We can see it measured in surveys like AAII, where there's stubborn bearishness net still. And then we did the rounds, FundStrat did the rounds with a lot of our institutional clients the last 2 weeks. And I think folks are very cautious, which is actually good for stocks. They're cautious because, of course, markets have moved and our clients tend to be valuation sensitive. But I think adding to their frustration is that during that April downturn, many were selling their best names because they were trying to get defensive, and then they haven't fully reloaded yet. So I think that's why there's still room for stocks to go up.
So your clients are valuation sensitive, which makes me almost want to laugh, because is anybody valuation sensitive to what's been going on in the market? We're historically well above the averages on the prices that you're willing to pay for stocks.
Yes. I mean, what we usually tell our clients, but really at the core, any fundamental investor is going to use valuation as really one of their anchors, is that the stock market had 6 stress tests in the last 5 years, from COVID to the bullwhip supply chain, to the fastest inflation cycle in history, to the fastest Fed hikes in history, then to the Trump tariffs, and then, of course, U.S. bombing nuclear facilities of Iran. Those are things that could cause catastrophes for earnings, but instead the S&P earnings have actually grown. So I think we're in the process of re-rating the S&P. So I actually think multiples will continue drifting higher.
Okay, so let's talk about other so-called knocks on the market. Valuation, obviously, one of them. They say there's too much speculation. You look at some of these stocks, meme stocks, low-quality stocks, cult stocks, and other things that have gone up a ton. Now, you're the chairman of BitMine, which is new, right? Your role there is new. And I'm sure there's a lot of great feeling about you and the role and what's taking place there. BitMine's up 65% this week, okay? It's up 1,000% since you became chairman. Respectfully, I mean, come on. What's happening with these stocks? What's happening with some of this fervor that feels like it's in the market?
Well, I think the dearth of IPOs over the last 5 or 6 years has shrunk the number of stocks in the in the U.S. stock market. There's not even 5,000 listed stocks anymore. So these names that are IPOing are scarce, and that's why they go up. BitMine is really, in a simple way, you can value it on how much Ethereum it holds. When I joined as chairman, it had $4 of Ethereum held per share. That number is well over $25 today. So the stock isn't even trading at a high multiple of its Ethereum holdings. And it's well north of 25, but we've disclosed 25 previously. So it's actually, in a way, less expensive now than it was a month ago.
Welcome everybody to the Daily Recap Show, where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button, and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500, and US stocks closed out the week on a high note as Wall Street assessed President Trump's nomination of Stephen Miran to the Federal Reserve Board of Governors and took his new regime of sweeping tariffs. And as a result, stocks were broadly green, led by the mega caps. Nvidia up 1%, Apple up 4.24%, really leading the market higher this weekend, helping the market stay afloat. Google and Meta were both up 1%. Google actually up 2.4%. Very, very solid day. Tesla was up 2.29%. Amazon and Microsoft underperformed, but broadly a green day. from the mega caps. And as a result, software was actually kind of green. We saw financials participate as well. Healthcare, finally a green day here after what has been quite a number of very bearish weeks, except for Eli Lilly, which was down 2.37%. And then we saw mixed price action in the rest of the market. Real estate, utilities, a lot of the defensive sectors really took it on the chin. You could see real estate, utilities, and gold, they were down. Every other sector was green. So broadly, a very strong day across the board with the S&P 500 up 0.78%, again led by technology and financials, both up 1%. There were only two factors that weren't green today. That was mid-cap growth and small-cap core. Everything else was green, and that was led by value and core here in the large cap space. But all in all, just a positive day through and through. And I think the reason why we had a green day today and this week actually has to do with rate cuts. With all of the developments we've seen over the last couple of weeks, the market is starting to price in a September rate cut. And when we get that September rate cut, it probably means the rate cutting regime continues, and we may get like 6 or 7, potentially as much as 200 basis points worth of cuts through the end of 2026. And the market has to price that in. And guys, you want to know a fact? When the market begins a rate cutting cycle, right, and GDP growth is above 2%, the average S&P 500 return over the next 12 months is 19%. Very, very solid stuff. So that's what the market's doing in right now. It's sort of front running this number right here if we do get the September rate cut, which the market is saying, at least the betting markets are saying, there's a 76% chance we get a rate cut in September of 25 basis points. Another market mover today was some news from NVIDIA. The US government has officially licensed NVIDIA to export its chip to China. You can assume AMD is going to get a license as well, and a whole range of other US semiconductors. This is very, very positive, and we should see the flow and effects of this on Monday coming to NVIDIA. Maybe the market's priced it in already. At least the news itself should provide some fervor to the market in this coming week. And then something else of note, Trump is officially preparing the IPO for Fannie Mae and Freddie Mac later this year. It is official. This was on my bingo cards this year. At the start of this year, I said there's a couple of things that will definitely happen, and a Fannie Mae Freddie Mac IPO was one of them. And then looking at some other market movers here today, Apple was up 4.46% today, 13% for the week, one of its best weeks ever. And let me tell you this right now, guys, the tariff overhang is officially over for Apple after that White House press briefing, or that White House event we got earlier on in the week. That's officially done, and as a result, Apple can rally. I wouldn't be surprised if we see 250 in the name over the next couple of months, potentially before the end of the year. The trade desk was down 38% today. Brutal price action. Just for the record, this stock still trades at a 60 times EV to free cash flow, and it reported what I consider to be pretty good earnings. It beat on the top line, beat on the bottom line. Guidance estimates came in roughly in line, but the CFO departed, and there was a couple of things inside its earnings that were, in my opinion, a bit of a red flag. But if you want the full scoop, go ahead to my second YouTube channel. We have a full deep dive on the trade desk's earnings and why the stock crashed as it did. So go ahead, check that out. We also have videos here for Uber, AMD, Lemonade, Hims, Apple, Meta, all of the big names that you guys want to see. We have those names covered. And then Sweet Green, another market mover here today, was down 23% after it reported a rough earnings. The biggest issue here was that comp sales, same-store sales, declined 7.4%, and the company cut its full-year outlook. The stock down in a very, very big way. And then for everything we saw today, guys, there were 3,200 advances, 3,000 decliners. We saw net outflows in the Nasdaq 100 and the New York Stock Exchange. However, the S&P 500 still up on the day, and then market momentum did improve from yesterday into today, but however, above the 50% mark is only the 100 and 150 day. Everything else has lost its 50% rating. And let's talk about what this means on the charts. Now, guys, this is the S&P 500 over the last 5 days of trade, and you can see we are up 1.63%. If we go ahead, add a couple of other names that we like to see, we'll add the Qs, we'll add Bitcoin, we'll go ahead, we'll also add gold right there. Let's see if there's anything else. Yeah, no, we'll add the RSP. You can see that stocks were actually broadly bullish, but really just led by the mega caps here. The Qs were up 2.61%. Bitcoin was up 2%. The SPY was up 1.63%. And that outperformed gold and the broad market. So Mega caps on the back of Apple continues to rally along with Bitcoin, which is essentially like a 2x or 3x version of the Qs right here. So, a very solid week through and through. But if you dive into what's happening under the hood, things are not quite as strong, especially with the RSP only up 0.24%. And then if we go ahead, actually add the IWM, let's see what small caps did today. Actually, the IWM was up in a very big way. So small caps did do a good job. So it just seems that maybe the RSP was the outlier, but the IWM up 1.76%, actually beating the S&P 500 this week. Very interesting day of trade, or very interesting week, I should say. On a year-to-date basis, you can see gold continues to outperform, up 27%, but Bitcoin up in the fold, and the Qs officially in double-digit gains, as you can see right there, after the rally we've seen in the last 5 days. The S&P 500 approaching double digits and the RSP underperforming. The IWM still negative for the year. Very, very interesting, but all of these indices are big from the tariff tantrum lows. Looking at today, you can actually see we had a broadly green day, except in mid-caps. Mid-caps was down 0.1%. Small caps were up. The Russell 2000 was up. The RSP was up. And the Nasdaq 100 outperforming, hitting just shy of 1%. Very, very solid day across the board. Europe was green. The Middle East and China were slightly red, although not disastrous. And Ethereum outperforming in the crypto space, but Ethereum and Bitcoin are both green here, and Ethereum officially over the 4,000 level. Crazy, crazy price action, if you ask me. As a result, yields move up. So too did the dollar on the back of everything that we saw this week. I guess just, the stronger economic backdrop. Yields are going to rise and the dollar is going to rise as well. The TLT fell as a result. And then gold, we actually just go have a look what happened here for gold, up 0.79%, and then silver. And then silver was actually just flat here. Now let's talk about the S&P 500 and a very crazy week, a bullish week, but a crazy week nonetheless, especially with all of the tariff news and trade news we got. But the market sort of just brushed off all of the bad news and continued to climb the wall of worry. We did have a pretty crazy week. For example, if we go here on the daily chart, you can see that we definitely did have red days. The red days were, right in between here. This was Monday, Tuesday, Wednesday, Thursday, Friday. So Tuesday and Thursday, we had very red days, but we paired all of those losses on those days and then continued to march higher. Off the lows we made right here after this bearish engulfing candle and the sell-off, it did look like we probably were going to sort of like go lower here, but we sort of put in a low. The dip was bought and then we just continued higher. I thought we were going to move lower, but that is not the case. And this is why you stay invested, right? Because if you're wrong, you capture the upside. And if you're right and we do go lower, you just go ahead, buy the dip, because ultimately this market is looking very, very good for us to continue high. I mean, earnings look good, margins look good. Everything just looks really, really great at the moment. And as long as the mega caps continue to rally and continue to perform fundamentally, I think stocks will continue to do really, really well. Yeah, but this price action did look ugly, but we're approaching all-time highs in the S&P 500. And I don't see why this momentum can continue into the next week, especially with earnings, nearing, teens percentages for this quarter. The Nasdaq 100 put in a new all-time high and even a weekly high, as you can see right here. This weekly chart for the Nasdaq 100 looks so bullish, like incredibly bullish. You can see it just making higher highs, higher lows into all-time highs. Extremely bullish stuff, even on the daily chart, right? So I do think we go higher. We probably can go ahead, test this level right here, this 23,000 level. But ultimately, I do think we're probably going to go higher just because earnings are so good. Rate cuts are coming, and we may even just rally, for the throughout August and maybe see selling in September. Either way, you want to stay invested. We're long this dip, and we're just going to keep going higher because and if we do get dips, guys, if we do get pullbacks, right, you just want to go ahead and buy those dips, because I do think, especially with the S&P 500, 6,700 is on the table for sure. Now, quickly looking at Bitcoin, some of our other parameters here for the market. Bitcoin continues to move now. The Bitcoin's actually open on the weekend. You can see we're seeing a little bit of lower volume activity here, just consolidating the move we've had. But ultimately, as it pertains to Bitcoin, I did say that we would find a little bit resistance at this level right here. That's exactly what we're seeing right now. However, Ethereum is blasting above this resistance zone right here. Now, for those that don't know, if you go to the weekly chart and zoom out, right, this was a heavy resistance zone for Ethereum. Call it the 3,900, potentially 4,000 area. We use it as resistance right here, and now here, but we've broken above on the weekly chart. And you can see on the daily chart, we've broken above this right here. And Ethereum looks really, really good. We put in a low right here. Then we had a massive move up, consolidated, and then had a massive move up. Now we've done a little bit of a mini consolidation, right? Had a shakeout of the bulls, and now we're moving higher. And like I said last week, guys, what we want to see for Ethereum is sort of like a move above the 4,000 area. We got that, check. Now what we want to see is consolidation at these levels, right? And then a continuation of the move to the upside for us to eventually go ahead and take out the all-time highs right here for Ethereum, the all-time highs being 4,800. And ultimately, I want to go ahead and get that psychological level of 5,000. I am bullish Ethereum. I am bullish Bitcoin. I think both of them are going higher. And we also know for the fact that when we look at M2 mining supply, go ahead and check out yesterday's video. Bitcoin is going to move higher. And as a result, Ethereum is going to move higher as well. Now, guys, quickly, let's have a look at some of our other parameters. The 10-year yield, seeing a bit of strength right here, but ultimately, I wouldn't pay super close attention to it. We're very clearly on a downtrend, and the Fed ultimately, it does look like they are going to cut rates in September after that labor market data, that very poor labor market data we got last week. Now, looking at the dollar, we did say we're looking for a little bit of strength in the dollar, and that's what we're seeing. We're putting a low right here, and now we are putting in the basis of an uptrend, right? We're pulling back right here. If we can find support, continue to move higher, that would be trend continuation, and we continue to see the dollar go up. I wouldn't mind actually seeing 100, 101 in the DXY. I do think we're going to see a little bit of more strength in the dollar as time goes on. And we have seen a bit of a bullish downtrend here. I think we're going to see a lot of strength in the dollar looking ahead. And then gold, I think we're just going to continue to consolidate in this key area right here. Now, guys, looking for next week, some stocks I'm really liking, a stock I've been bullish on for the better part of 3 months. If you've been following me on this channel, you know this. One of them is Lemonade. We were strong buyers right here at these levels right here. And look at us after earnings. The stock was up 30% after its earnings. And I think we're going to go ahead and retake the 52-week highs right here for Lemonade. Call it the 53 area, the $53 area. So if we do get pullbacks to this $45, $46 area, go ahead, buy those dips. Another stock that I really like is NBIS, another stock I've been bullish on for the better part of the last month. If we do get pullbacks to this like low 60s area, buy those dips. Ultimately, we're probably going to go back to these all-time highs at the $87 area. A very solid earnings report. That is why we're seeing the momentum to the upside. And then in terms of ETFs, guys, if you want exposure, I would say go ahead, look at the Nasdaq 100. There is nothing more bullish than this chart right here. Look at this daily chart. Super bullish. Like nothing looks better than that. This is just a very clear up all-time daily and weekly high. It doesn't get any better than that. And diving into sentiment, this is CNN's Fear and Greed Index. And guys, we are officially in the greed zone. That is driving the market right now. We've moved from the extreme greed into neutral in recent weeks as investors have got slightly more cautious. However, after the week we've just had, we've pushed back into greed zone, and ultimately the market is just really ignoring the risks and we're just chasing returns simply because the earnings picture has been absolutely fantastic. I've been harping on this. Q2 updated blended earnings is officially in 13.2% versus the same time last year, smashing the estimates coming into earnings season. 80% of companies beating the analyst expectation, and the translation of this data is that Wall Street's bar was set too low. At the same time, big tech earnings, which is core to the S&P 500's earning power, has seen a 12% beat so far, with Nvidia set to report in the next couple of weeks. And as a result, we've seen revisions upward for the full calendar year 2025 earnings. These are the bottom up estimates, and we've seen a massive revision as earnings have come in significantly better than expected. And that is a good thing. If earnings rise, so too will stocks. And ultimately, what's powering that massive move is the macro. GDP for the third quarter sitting at about 2.5%, very solid. And this right here is a very bullish indicator. This is Visa's spending momentum indicator, which made new recent highs in July, not seen since 2021, the stimmy-fueled pandemic recovery period. Rather than looking at dollar volume, which is skewed to the top 10%, this credit/debit card indicator looks at whether a greater number of individual accounts are spending more or less. So it is a broader measure of spending than just nominal dollars. Given the strong real employment income from the recent employment tax data, this shouldn't be surprising and runs counter to the consensus that the US macro narrative is falling apart. So all in all, you don't want to bet against the consumer
consumer, the consumer remains robustly healthy, and I've been saying that for the last couple of weeks, and ultimately we're seeing that in the price action of the S&P 500. Now guys, looking at data for the rest of the week, next week we really kick things off. We have inflation data, the CPI figures. The consensus there is 4.3. That's the core inflation number. The headline number is 4.2, and we're looking for inflation figures of 3% and 2.8% respectively for core, the headline. We also then get the PPI on Thursday. So Tuesday CPI, Thursday is PPI, and then Friday is retail sales. The number there is 4.5, and then we also get Michigan consumer sentiment. So a pretty big week of data. And then earnings is starting to cool off. On Monday, we have a couple of names here. Rumble, Monday, that's actually the name of the company. We have Oklo, after the bell, AST Space Mobile, right? Big Bear AI, BBAI. But yeah, very light day here on Monday. Then on Tuesday, we have CoreWeave. They're the big name everybody's going to be looking at, particularly when it comes to NVIDIA's earnings, which is a week after next. And so this is going to tell us a whole lot of what to expect from NVIDIA. We also do get Circle before the open. I'll cover these guys as well. And then Wednesday, we have Cisco Systems and D-Local. They're reporting their earnings. And then on Thursday, we have NU Bank, AMAT, John Deere, and then JD.com. So while not a big market cap week of earnings, we do have some incredibly pivotal names with Circle, CoreWeave, Cisco Systems, as well as stuff like Applied Materials. But specifically here on Tuesday, this is going to be the biggest day of the week. But guys, if you've made it up until here, thank you so much for watching. If you like the video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.